Thank you very much for spending your time to watch this DVD. My name's Eliot Falconer. I am the CEO of a group of 5 companies which owns and operates 12 offices throughout the Wellington area, all under the Harcourts brand. In town we have the Kandala and Miramar offices. Out in the valley we have offices from Eastbourne, Lower Hutt, Upper Hutt and Silverstream, and then up the Kapiti coast from Parramatta and Whitby through Paraparaumu, Waikanae, Otaki and Levin. Those 12 companies are all Harcourts offices within the Wellington area. As one of our current vendors, I'd just like to spend a little bit of time trying to share with you some information that we've gained throughout the marketplace over the last 12 months to try to help you understand what we've all been going through and also provide some solutions going ahead in the future. To do this, I'll be answering a number of commonly asked questions, and there is no right answer to any one of these questions, but the information that we've gathered over the last 9 months puts us in a strong position to share with you to know what to do from here. Question 1, what has happened to the market? There are 2 things that make up the market. The first is the volume of turnover. I'm going to show you a graph here which shows exactly what's happened over the trends of the last 10 years, but particularly over this year. First of all, up till November last year, the market in Wellington was particularly strong, where it had died in other areas. And then after Christmas, our volume started to drop seriously. The trends over the last 12 years show that Wellington has, on average, about 750, 800 sales a month, and these peak in months like November at about 1,200 sales and then back down. As you can see by this graph, the last year, and particularly since March and April, has gone right down to between 450 and 500 sales a month. These volumes of sales are at all-time low records. The line is quite clearly different to the others, but the most interesting thing that happened is come October and November, when traditionally the market climbs a little bit in October and then to its peak in November. This year that just didn't happen. In September the sales went up to 495 sales, but then back down in October rather than climbing up. In November, the biggest month of all, the sales only just peaked through the 500 sales for the month mark. So these numbers are different to anything we've ever seen in the past. What has happened to pricing? Last year, our prices continued to rise right up until November, which was out of sync with the other markets, being Auckland, Central and Christchurch. When we came back after Christmas, the prices had dropped 10% overnight. The severity with which they dropped then continued in approximately March, April, when we finally got our heads around the first 10% drop and took another 5% off straight away. And I believe that there was approximately another 5% 2 months ago. This has left us in a position where it appears that 20% off the peak value prices is the level we're at now. What's happened to prices as a result of that? This is not an exact science, but pricing, as far as we can tell, has dropped by about 20% on peak value. If you listen to the analysts and the economists who are trying to anticipate where prices will go, some are picking that they have to drop between 25 and 40% below peak prices. The evidence that we're seeing in the marketplace is that if you do drop 20% below peak price, you are likely to attract a buyer in today's marketplace, which will result in a sale. Where this has come about is that the interest rates went high. There were a number of high cost factors in the marketplace. All those things over the last couple of months have been removed. We've had our election, we've had our commodity prices, our oil prices drop, and as a result, just recently, the 1.5% drop in interest rates. This is an unprecedented move of dropping interest rates, and the theory of doing that is to inject life back into the real estate market. Stunning thing about that is that it hasn't yet worked. We have not seen any flow off from that. Still some problems out there. I believe the largest problem is one of confidence, of buyer confidence, saying, why would we buy now if we don't have to, knowing that interest rates will come down and that, according to some experts, prices still have to drop. So when will it get better? This is the $64 million question here. The best we can gather is that middle of next year is when volume will grow. And that seems to be a common thought pattern. We do, however, have February and March coming up, which are traditionally 2 big months of the year, and the feeling we get over the last couple of weeks in December is that buyers are actually wanting to take some action. So hopefully we'll get some lift in February, March, but general consensus is middle of the year for volume to change. When will prices change as a result of that? This market is like any other market. It's a market of supply and demand. So at the moment there is an enormous oversupply of stock, and until that starts running down, we will not see the prices change. If we look back to post-87, it actually took 4 years until 1992 before the prices started shifting. I think with the severity of the drop this year, the best pick is that the severity of the increase will be equally as large. However, this may take 2 to 3 years before the prices start changing. So, what determines a property price? Supply and demand's the most important one, and this is different over all markets. The city markets, for example, currently are experiencing a lesser amount of stock, which means that we're getting competition in a lot of tenders with back to 9 and 10 offers per tender closing. Out in the valley there's a little more stock but more activity. The further up the coast you go, we have an enormous amount of stock on the market, and so we actually have 3 completely different markets within the Wellington region. So the second thing that determines price is competition. If you get one buyer, the buyer's in a position where they can negotiate and try and secure a property at the lowest market level they can. If you get 2 buyers, however, by a cut-off date, then the competition will always drive the price up. The third one is the perfect buyer, and unfortunately it's something that we can't easily pick. But with good marketing and exposing your property to everyone, the chances of finding that perfect buyer might be a little higher. Once again, I say the best estimate we can find from these buyers, the level that prices need to be to achieve a result in today's market, is about 20% off peak value.